Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. The last couple of days have been very ugly, and we have a bunch to talk about. We've got some macro factors to discuss, as well as on-chain for Bitcoin. We'll look at the price chart. We'll also look at some legacy markets. And I will try to paint a narrative for you, a cohesive vision of what I believe the markets are doing right now and what I think the next month or so may have in store for us. So I hope you're ready to look at a bunch of charts. I'm going to hop around a bit, but there's a lot going on, and I feel we have several things that need discussing. So strap in, friends. If you enjoy my content, make sure you give my video a thumbs up and subscribe to the channel. If you turn on the bell icon, you'll hear about all my videos the moment they come out, and that kind of support means the world to me and the growth of this channel. So let's get into it. What a tumultuous few days we've had in the markets. When we spoke the other day, we had caught a bounce here at the bottom of this channel and at 53,000, which is where we were hoping to catch a bounce, to see price support. We did see that. We were remarking on how clean this bounce was. And it seems that on our rally back up after we got this strong candle on Sunday, that we've been kind of consolidating here around 57,000, finding some short-term upside resistance at some of these smaller levels here that I've drawn. And this is kind of what I expected. I didn't think that we were going to parabolically shoot out of this range because the market doesn't seem to have those conditions in it at the moment. So this kind of sideways action is what I thought we might see once we got out of this basin. We did get above this trend line yesterday. One of the 8-hour candles got above it, but it was swiftly rejected. So the market's clearly not ready to move forward. And when I think about Bitcoin, it's hard not to feel that a lot of what's going on here is being affected by the macro environment. The traditional markets have had a very ugly few days. If I pop over here to the Dow Jones, this is it for the last 2 years. And you can see that yesterday it closed below the 200-day moving average, which is this red line here. Most of this money printing bull run of the last 18 months has held above the 50-day, which is the green line. We've continued to bounce along it, once in a while testing the 100-day here in the middle. But we're now back down to similar levels that we were at in September and October, when the Dow had a really considerable pullback, about 5%. And we've seen something similar over here. And so while the Dow has puked below the 200, which is obviously a bit concerning, the S&P 500 hasn't quite made it down there. The tech stocks are holding up a little better than the industrial side of the economy, but it does look like it's about to threaten the 100-day moving average. Something I heard Checkmate say yesterday has been rattling around in my head. This looks like an area where you would expect the S&P to catch a bounce. Caught a bounce here a few months ago, and it's continued to do that here in recent history. It has been supported by this 100-day. But if we lose this level, just as the Dow Jones recently lost this level, then we could have a pretty ugly couple of weeks ahead of us. No matter how much of a hedge against inflation many Bitcoiners feel it to be, it is still a risk-on asset in the eyes of a lot of investors. And so when they go risk off, Bitcoin goes risk off. If we start to see more weakness here in the tech sector, if the uncertainty here on the industrial side starts to bleed over here and the big cap tech stocks can't hold up, the next few weeks that follow could be very uncertain. This is some of the macro uncertainty that we've been talking about for the last few months that could throw a wrench in the potential for this bull market for Bitcoin and crypto broadly. Additionally, yesterday, the VIX, the S&P Volatility Index, spiked here above this range that we had been bound in for the last year and a half. Seeing this volatility spike here is something that gives me pause. Makes me feel like this weakness we're seeing might be a little bit more than your standard 5% correction in the middle of a bull market. We're actually out of this channel, and we bottomed here around the level that we were at pre-COVID and have now rocketed out of this trend. And this is a trend reversal look on the VIX here, which makes me feel like we have some volatility coming up and that perhaps this move isn't quite done yet. If we compare, this is the S&P 500 to the VIX. When the VIX spikes as the S&P sells off, these moments often mark local reversal points. So one could argue, hey, VIX is spiking, S&P is selling off. This is a place to buy. Well, you could maybe make that argument based on the trend here, but I feel like this is a moment to be cautious and to wait for the market to show a direction. One other factor I think weighing against price appreciation in the month of December is the fact that we're near the end of the year. and many money managers are likely looking to lock up their gains after a tumultuous and volatile 2021. Why expand your risk sheet in the final weeks of the year when you will get a clear balance in January to begin anew? The end of the year is not a time to take risks, and December is often a lower liquidity environment for legacy markets. So when I think about that in combination with some of these other technical weaknesses, I feel that there's a general hesitance in the market. And when we look at Bitcoin, we've seen that it's also kind of been trapped in a range of weakness here since creating all-time highs. It seemed to kind of run out of steam here in the high 60s, and we've been looking for some momentum for the last several weeks. You know, we ripped in October from 41,000 all the way up into new all-time highs within about 3 weeks. And as we hung around up here, a bunch of investors got opportunities to make decisions. People who wanted to take profits did so. Those who felt the need to buy the top did so. And we've spent the last few weeks kind of wringing out the last of the decision making at these price levels. What starts to happen is the market loses interest in a price area. You see activity waning, and the bids and asks kind of collapse down towards the price. Volatility reduces, but it can't stay that way forever. And eventually you reach a tipping point. Price gets knocked down or it gets shoved up, and a bunch of new traders are spurred to action. And all of a sudden energy returns to the market and it goes in a direction. We need something like that to happen. And my suspicion is that because of this uncertainty we've just been speaking about in the legacy markets, that might result in some short-term downside action, maybe down to 50K. Maybe we test the high 40s. If I zoom out here, we do have some support levels in terms of price back here at 41K, and we've got another level here around 48. And what this market may need to do is flush down here and scare the hell out of some people. Markets tend to gravitate towards maximum pain. Maximum pain is the pivot point, the moment when cabin pressure is at its maximum and something changes, because markets are often driven by the emotions of the humans taking part in them. If price gets back down to this area, we will shake out some investors. And if we see a sub 50K Bitcoin, I personally would see that as a buying opportunity. You know, I had a call yesterday with a bunch of on-chain analysts, and the general sentiment that we had as a group was that this 40 to 50K range for Bitcoin feels very healthy. It feels right. There's been a lot of capital that has inflowed in these ranges, and we spent enough time here now that it feels like a fair valuation. It doesn't feel like a high price for Bitcoin. And so if we start to test those levels again, I suspect that many other investors will feel similarly, and that we'll start to see some demand step in. Not unlike the activity we saw in the summer when we were establishing a 30K range. Whenever price got below 30K, it was swiftly bid back up. And I do believe that 40 to 50K represents that level for us now, months later. So let's hop over to the on-chain space and look at some of the data that might help inform some of these technical aspects we've been talking about. We'll start here with the realized price distribution. So this is all held Bitcoin separated by the price at which it last moved. The orange bars represent the volume of BTC that sits at each price. We are currently here at this gray bar around 56, 57,000 at the time of recording. And we've looked at this chart a few times over the course of the channel, but it's been probably over a month since we looked at it again. And in our past observations, what we've noted is the amount of volume that sits here in these ranges. This here is 30,000. This here is 40,000. This is 50. So you can see we've got these nodes of volume from 30 to 40 to 50, and here is 50 to 60 right here. And so while this does look a bit top heavy, we've got a bunch of coin that are currently sitting in loss, people who bought the recent highs. We also still have a lot of holders of coin from 30K to the current price that are not selling. They haven't sold, and the chances are they will continue to hold. They've weathered a lot of uncertainty. Several of their cost bases have been tested again and again, and they've continued to hold on to their Bitcoin. This is part of what informs my belief that 40 to 50K is a very fair valuation for Bitcoin. We had a lot of accumulation here, coins changing hands, investors shuffling their stacks, that this to me seems like the new normal, which is why I don't feel that we would experience much downside into these lower areas. Here are a bunch of charts of network activity. Here we have the number of active addresses in purple. It was increasing from the summer bottom and it reached a peak here at the highs, but it's been pulling back a little. It's been getting a little quieter on chain. Active entities, these are the individual participants that own the active addresses. So one entity may own one or more addresses. This value has been rising as well, but has stayed kind of flat for the last few weeks. It hasn't continued its growth. And the number of transactions on chain has likewise showed a similar pattern. All three of these lines look very similar. We had high values at the peak of the bull run, quick fall in the spring, slight growth back over the last couple of months, but still very low activity levels. There isn't a lot of raging demand for Bitcoin right now. Part of what's keeping it from breaking out of this range. We don't have a lot of people selling. As we can see here, there are still a lot of holders of Bitcoin from prices just below this. Bitcoin still has a lot of newer investors, people from the last few months, holding on to coin and standing pat. But we don't see an influx of new investors showing up each day to buy their first Bitcoin. That activity isn't really here right now. And without that, many of these macro headwinds are playing an outsized role on Bitcoin because of the lack of demand. There is a constant buy pressure on Bitcoin. Each day there are hodlers, dollar cost averaging, but the forces that really push price forward, that really cause those bull runs, is not currently in this market. But what is in this market is very high futures volume. Open interest, which is the value of all contracts and futures, is basically at all-time highs. Right now, I'm showing you just the perpetual market, which is one side of the futures market. It's basically at all-time highs in BTC terms. The high was set back here in April at the market peak from when Coinbase had its direct listing. We're essentially at that value now, and we've been holding up here at these high Bitcoin values in open interest for the last few days. If I go look over here at total open interest, so not just the perpetual market, but also the expiring contracts, again, same thing, basically all-time highs. Here's the April peak, all-time highs. So we've got this high volume. Much of it looks to be coming from Binance. They're this big purple bar at the bottom of the group here. Binance has been growing and growing. We've been seeing the funding rate, which here represents the bias and imbalance in futures. We've been seeing the funding rate staying neutral and receding somewhat in the last few days. Now 0.01%, this level right here, is basically a market neutral. So when funding goes below 0.01%, it's starting to pull towards the short side. In the last few days, this has been going down, while open interest is staying higher, which to me signals that we may have some shorts in this market. And as far as I'm concerned, that's fine. I think it's healthy to have some shorts, especially here in some of this price weakness. If everyone was gig along at the same time, if we had consensus, that would be an opportunity for the market to take the other side of the trade and counter everyone's expectations. I think we're seeing some shorting come in here as open interest is staying elevated and the funding rate is declining slightly. I had a call yesterday with several on-chain analysts, and we were talking about the market and everything going on. And there was a general agreement amongst us that the amount of leverage in the system right now is too high. It feels top heavy. And what may need to happen is a flush of some of this leverage to trigger the blood in the water that catalyzes the actions we've been speaking about. We've had positive funding now for many months, accompanied by continually rising speculative volume in combination with a low spot demand environment where casual retail is clearly still at home. That to me feels like an unsteady mixture. If I go back over to the price chart and I see this weakness here in the Dow and I see this uncertainty here in the S&P and I see Bitcoin just kind of ranging sideways here, and I see all of this leverage in the system and I see that we still have kind of low activity. To me, it feels like we are headed for a max pain scenario. And that doesn't mean doom and gloom. I'm not trying to suggest I think we're headed for a massive crash, but I do think that from time to time, overly bullish, overheated markets need corrections, and the legacy markets badly need one. They have been pumped to the stratosphere with money printing and irresponsible monetary policies, and those markets are teetering. They need a correction, and when that comes, Bitcoin will be affected. But where I try to focus is what I think that means for Bitcoin as an asset and how I believe it will respond. And when I look over here at coin destruction, when I look at the spending on chain, it is still historically low for older coin volume. Holders of Bitcoin long term have changed almost nothing about their behavior. Distribution out of these older groups is very low. The average age of coins moving each day, which is the average spent output lifespan chart here in the center, is very low. This would be spiking if coins with a lot of coin days accrued to them, which means older coins that have been sitting. If those were being spent in high volumes, we would be seeing this chart rising. We would be seeing coin days destroyed rising. We would be seeing dormancy rising. But all of these metrics here, which represent coin destruction, which represents the activity of older hands, which hold the majority of supply, all these charts are signaling a quiet. These are accumulation signatures. We're simply not seeing a lot of selling. When I hop over here to long-term holder and short-term holder supply, the distribution for these groups is also very controlled. Long-term holders are just kind of stepwise, gently distributing out of this position. They're not dumping. Short-term holder supply, likewise, is on a slow, very gradual uptrend, which looks more like de-risking than dumping. Taking slight bits of profits, shuffling some coins around, but generally standing pat as we enter the last month of the year. Here's a look at exchange balances. This is the amount of BTC across all the exchanges we track. There's been a slight, very slight, inflow to exchanges over the last couple of days. Again, very controlled, a very small amount of coins. But seeing this behavior, combined with the gradual distribution of long-term holders here, the low destruction activity, meaning low spending activity from older hands, looks a lot like de-risking and controlled behavior. So I know that we've been hopping around a lot here, but I hope that I've been painting a picture for you of what I feel the market is doing. I think that December is a risk-off month. I do not expect new all-time highs in price in the month of December. There are a lot of technical analysts out there who have price models that expect 100K Bitcoin before the end of the year. I do not believe those models will bear fruit. I think that we're headed for some sideways ranging action for the month of December. I don't know that we'll break below this 53 level here, but if we did, I wouldn't be shocked. And markets gravitate towards the outcome of maximum pain. And I think that a dip below 50,000 to shake out some traders, to squeeze out some of this all-time high leverage that we have amongst these long traders, might be just what the doctor ordered. And it may not come from anything that Bitcoin does. It may be driven by some of this macro uncertainty, these headwinds that we have little to no control over. And so with that understanding that markets move to maximum pain, I think a month or two spent going sideways without any true direction is the real killer. Boredom will hurt more than quick price flushes because people want something to happen. Waking up every day and seeing price at the same place it was a month ago is soul crushing for eager investors looking to realize some gains, looking to see their portfolios grow. And as I mentioned earlier, I do believe that any prices that we see below 50K will be perceived as an epic buying opportunity based on the history we've looked at over the last 6 months. There are still many signatures on chain that look bullish, that look very healthy. Strong hands continue to absorb more Bitcoin. Miners continue to hodl. All that activity is very encouraging, and it's why our macro thesis of a bull market for Bitcoin hasn't been invalidated by any of this short-term uncertainty. But I want you to understand, as my viewers, that I think the next few weeks, possibly month, could be painful and uncomfortable for investors, both in the traditional markets and in Bitcoin. But if history is any teacher, these moments are usually short-lived and help to strengthen the conviction of those willing to weather the storm. I am not a financial advisor. I'm not giving anyone investment advice. But right now, I am very comfy in spot with my Bitcoin. And based on what we're seeing the on-chain supply dynamics show us, many other hodlers feel the same way I do. The next few days will be very important for us to watch the markets in their entirety. Pay attention to the S&P. Pay attention to the 10-year Treasury yield. Pay attention to the VIX. If legacy markets show more uncertainty, we may reach a trigger point with derivatives where we see liquidations and quick downside for Bitcoin. But as we've spoken about before, when you see downside, go look at the data, take a step back, and assess what the on-chain supply dynamics are showing us. What are the various cohorts telling us about their confidence in Bitcoin? As long as they are not selling out of their assets, then our broader thesis is intact, and short-term uncertainty will eventually be in the rearview mirror. And all this volatility will eventually be behind us. That is my current base case, and that's what I expect to happen over the next few weeks. Chop, sideways ranging, maximum pain, shake a few people out, most hodlers will stay strong, and maybe by January, this will all be behind us. All right, I know we just went through a lot very quickly, but I hope I was able to paint a cohesive picture for you and give you an idea of what I think will happen over the coming days and weeks closing out 2021. This is a risk-off time for the markets, in my estimation, and not a place to be making big decisions. I am sitting with my hands folded and observing these markets. I'm keeping some dry powder on the side in case we see quick downside, because I believe it will be swiftly bought up. However, I do think that December will be a bit of a boring and painful month for price. I would love to be proven wrong and see a strong rally that completely shatters all my expectations. But if I'm being reasonable and objective, the markets look weak. Make sure you follow me on Twitter at TXMCTrades. I post a ton of analysis and content all the time, and you're welcome to ask me questions and interact with me there. I'm on Twitter all the time. If you have any questions or concerns about the things we talked about today, or if you disagree with my assessment of the markets, please let me know. I am a student of data. I am not married to any of my theses. If something is wrong, or if I am proven incorrect, I am more than happy to hear about it and to learn from it. We'll check back in a couple of days and see what we've missed, see if anything has shifted course. Until we speak again, remember, the markets seek out pain. Take a step back, don't overexpose yourself, don't trade with leverage, and let the data inform your decisions, not the news, not the emotions that come with the news, because in data we will find our edge. That's all I have for you today. We'll talk again very soon. Cheers, friends.